Hello, I'm going to review today's market activity, Wednesday, May 29th. It was pretty straightforward, to be honest. I mean, from the opening already. It was enough to have taken a couple of good setups and that's it. Because they were setups that distributed a good amount of points. So, let's see how everything went. Honestly, this time I didn't even look much to the left. I didn't even look much around here to see what the market had been doing to have a bullish bias. Simply when I woke up, I checked from my phone in 5 minutes like this and this. And although I'm not a fan of counting swings, I said, well, this looks like it already made enough swings in a minute. And not for that reason was I already directly bullish. But there was also another news item I saw early in the morning from Apple. Winning a legal battle over the issue of commissions in the App Store. And well, I just saw that briefly. And knowing how the market reacts to any announcement, whether it's about war or one of the most important stocks on the Nasdaq list, I said no, I'm going super bullish. To counteract what happened in Asia and London. And well, I just saw that the price had already reached an area here. It was like the last one before starting this whole journey. Everything from back there was mitigated. This was mitigated. So there was no way to sweep this and do something there for order flow because even the origin where the candle pattern is was mitigated. So I said, well, let me see how the opening behaves. And then I start looking for buys. So the opening just started to go up, to go up, to go up. So I started looking for a way to buy. So, well, let's see now how all this played out. Well, I came by here early London, and in the morning, New York, making more decline over here. This low got swept, so this high is at risk. Due to the rejection, it got swept, so this low is at risk until it closed with body, so we are left with our structure. So this is like the previous 1 minute swing. Well, there were others around here, but this is what I saw because the opening went directly to this. So this is what I was looking at first. So well, the opening did not give a quick pullback here. It just kept going until it gave a candle pattern, which is what I used for the first long. Came down here and made the candle pattern here when it took out this high, the high that was, and put this low. So with that, on this pullback, I entered a long. It put me in drawdown, honestly, because I entered from the 50% and quite aggressively right away, and it gave a reaction. And then it continued with a pullback move. That here was this, so nothing, it gave the candle pattern. I entered here because it was in confluence with this fractal. It gave me some points, but I wanted nothing. I was using more TP points, 10 or a bit more, and well, the stop was almost exactly at 10, so nothing. It put me in some drawdown. I really thought it was going to hit the stop, because it had broken this and everything. But finally it happened. So that was the first thing. Look how later it comes. And perfectly touches here at 30%. And that's what gave the pullback to the flip area. So that was with a tap to the imbalance that lasted a minute. And since it stayed here for several minutes, that gave room for another imbalance to form, so 5 minute is this 5 minute imbalance. So then the price touches it. Well, the imbalance, honestly, I don't care that the 30 to 70, not simply in a trending market. I see it mitigated. That's it. So that's where I made the second entry. Seeing here, like sweep that, it came and touched that other imbalance. Because there were two here. There was a small one, and this one in a minute. Then in 5, there was only one imbalance, and in seconds, there was a rejection. So it was quite an aggressive entry, seeing that it even broke the responsible. So here's the little fractal responsible for getting us out of this swing from this lower time frame. So seeing here that it broke, I entered here. It couldn't break the high, so it came to a pullback, and not just like this fractal here to the right of this. In a 2-second, 1-second time frame, it will be clearer what happened there. Some drawdown there too, but the stop here was smaller. And this one went quite linear to ATP. So that's what happened quickly at the opening. And then it hit, well, the 50% of this area, which gave the setup to go here. Look how nicely that ping pong played out. It reached there at C50, made a candle pattern in a minute, came back here responsible for 30%, and with that, we went down. The market began moving. Then it gave good setups in both time frames, and there it stayed as the candle pattern also remained unmitigated. I made a short around here. Let's see. Here's this candle pattern right here. Now looking at it from a 1-minute view. So it's a high, low, a high. I take out the low. Since the pullback was quite fast, in seconds, there was no time to see it here in a minute. So when I saw that it reached almost 50%, I didn't take anything aggressive, but on the second touch, when it tried to break the first high and couldn't, there is a small short. At this fractal here, in this high. Look how the price was making impulse, 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 respecting previous fractals. And on this last attempt, it tried to break, but couldn't. Then it's more about the intuition and experience of seeing how the price, when making the impulses, does them linearly. It doesn't struggle as much to break. Here it breaks, here it breaks, here it goes and breaks. But in this one, it reaches the high, and it's just a 50 of that, and it doesn't break. So, seeing that the price makes a candle pattern also in 5 seconds, closes below this, does this quick pullback, that's when I got in up to this fractal. That one was more, a bit fewer points, and well, breaking that 50 in that area. So then the next thing was, which areas? By order flow. This area never validated the price. Pressure never came back to her since she left it and gave us a downward positioning. On the other hand, this entire area back here, and especially this one, is the origin of this last upward move before going down. If the price has read it with this pullback, then here is where the topic of market profiles begins. When an order flow in one direction, or a trend also in one direction, meets an origin or an area of opposite order flow, then we can expect this type of range. So well, the price abandoned all these areas. It didn't fully mitigate even this area. So When I see that an area isn't fully mitigated, I continue with my bias in that direction. We wait for the pullback and continue with our bias in that direction. So, over here, the price again made a candlestick pattern it had already shown us. All the closure with body above the 5-minute structure even, and it hit the 30% tick perfectly here in this pullback. So that's where I went back to longs. In the candlestick pattern it made with this cover, this 30%, because all this remained unmitigated. Even this area, which is the trap area, was unmitigated. So it's more of a magnet. It's not an area from which I want to take trades, because the price hasn't validated it for me, and it's not an area that I consider important. So, well, the price does this, covers the 30%, and there's the candlestick pattern. It's this low, it comes up to make this high, it takes that out, and then does the pullback before breaking the high, and that's where I came back. That's where I came back in. In fact, it did another flip over here in 5 seconds. So this one was quite nice, quite fast. Over here. I think I'd go over here. I did a long trade on this. This was it. Within 1 minute, if I'm not mistaken. Let me check. Exactly. So see, this is the high. And this is the responsible one. So he took the shot when it was his turn. Just like that. It was within the 30. So when it was this person's turn, and I saw a quick reaction, I went in and scored like 10, 12 points right away. Here I just saw that it touched it, and this candle immediately went like this with that rejection. I got in immediately, and I already aimed at the high, and there they were, 10 points, and immediately the pullback happened. Now back to the origin, where it was. If the responsible breaks, you already know what's next. The origin issue of order flow did not reach the origin. Impulse, pulse, impulse breaks. With the impulses, a responsible one remains. The flip remains. The responsible one happened, and there was the strong movement. This one I didn't take. For my part, I had already finished. I had already taken about 4 or 5 trades, so I left it there since they went pretty fast. But that movement was quite nice now. Well, it reaches the market up here and the topic of order flow begins. So the price had validated this area and it hadn't touched the 70 yet. So I swiped this several times. Here, I have now made a candlestick pattern, then a pullback to the pattern. So there are too many wicks, but it's understood that there is a candlestick pattern, and the pullback followed a movement here, and that movement was to come to the 50 of this last fractal that the price had made here, and with that it was that the price went to 70. Then look how algorithmic this is. I'm going to remove the levels from that area on the left. We already know we're there. And let's see all this in 5 seconds. Well, over here I missed another one that slipped by me. Getting to this responsible error around here, something very nice also happened. Another one where candles in 1 minute is this flip in 5 seconds, sweep of these hikes, and around here it hits 50% after sweeping all this, 50%, and additionally manages to mitigate like this area within that flip, which would be responsible for coming and sweeping this. And look how it gives them another flip, then it hits that 50% and gives them another flip, quick pullback to 50, plus the responsible one, and there was a very nice short where now, and that was to generate hype. So look how algorithmic this is. It's really hard to think there's no algorithm behind this. There clearly is. There are clearly high frequency algorithms. Well, this is like the closest to being able to explain it in a human way without having filtered information, seeing how the market behaves in seconds from one area to another. Okay, so this setup hit 50% from this area. We saw in 1 minute, and the 1 minute candle pattern flip was left here unmitigated. We'll leave this one for later. I mitigate 50% of the area, but I don't finish mitigating either the flip or the flip itself. I just take this wick, rejecting both in 1 minute and 5 seconds this low. And that took us to 70% of the area we had marked over there, and we rejected again. So look how the price is generating internal things. But the idea is not to try to guess. This is going to go here first, or this is going to go there first. The idea is to wait for it to bring out something, and for it to touch one of the things we have unmitigated at the extremes, the ones we've had left over for a while, or a reason over here, to the left as well, so that the price rejects from that reason and gives us the movement. But trying to get out from here in the middle, that's a lot of free stop loss they're going to take away. So save yourself from wanting to get in here in the middle, wait for it to bring that out. So well, cover that 70%. The candle pattern formed up there in a minute. In fact, we'll see it right now, how the price got here. And here from that 70. Now, it comes to the flip that was left unmitigated below. Sweep it all. Get all this out of here. Reject, and we go where? To the candle pattern that was left above. Unmitigated over here it is. The candle pattern stayed here, the flip. And then that movement, the drop, happened. %, comes this fractal. It doesn't continue as one would expect, but instead it breaks it. So here remains another candle pattern. Even with wicks, we already know that in a minute this will be forming a candle pattern, be it a quick pullback. What would be responsible before overcoming that? And to the 30% of the flip, and this responsible right here for removing this, then a good trade there too. Then the price comes again to the responsible, and the 30 of that candle pattern, which after closing with the body here would be a structure change in this time frame, 30% very precise. And from there the price starts to break down. I'll clean this up a bit here. I wanted to break down, mitigate. Now if the areas that had been left here without mitigating, then we see those origins again. Flips left unresolved. The price moved so linearly that it supposedly left us without an entry. I've advised for months to keep that, and here it is. The price hit that point, made another flip, likely a structural change on a lower time frame, pulled back to the candle pattern of that flip, then a low, high, and took out that low. Takes out this high, and here the pullback to 50% occurred, failed to put in a new high. So if it fails to put in a new high, what can happen with this low? It can be taken, So it takes it out, it's rejection, a good entry. Comes and takes the high but fails to put in a new high from this that they did not want to break, and that in turn is an origin that validates the price. At the moment it arrives here and gives this continuation of lower time frame. So there it is again. Sweep, tap again to that origin, which is also a candle pattern. Rejection goes away and also gave a candle pattern. Here takes out the low pullback to the candle pattern area. 50% perfectly, and it goes. And now it's up to finish swiping here before two failures. In setting a new high, the price arrives here, it swipes. It doesn't give a candle pattern yet, because there wasn't a high in this entire bearish candle to take out. With this bullish candle, you have to go to the candle pattern, and on the contrary, it starts closing below this. So it swipes all that to come and finish mitigating this level. That here it hadn't been mitigated by a tick actually, but it comes and swipes that first tab. So what it was doing here in a lower time frame, swiping the first tab and everything to make the run, then it did it here in the higher time frame of this first tab, that change of structure in about 15 seconds, 5 seconds, comes and swipes it, rejects, and now the movement happens. You see the strong movement. Now if we manage to get the high that takes us to this low, leaves a responsible one, pull back to the responsible one, and the price starts to go because of that. And here the origin we had marked, that had touched 30%. Look again, swipe that. From there it forms a pattern of candles again, then a high, a low, it takes out the high, takes out the low, retracement, and it's gone. Look how ugly. I mean, in reality, I wasn't watching the market all that time just now. Now I am analyzing as we go, but it was brutal. I was already over here until I set my trades. And then I got here in the afternoon when I saw another pattern that we will see right away. But look at that. It reached to mitigate. Again, to swipe this high, to mitigate. Now the 50 that was not mitigated. And over here, we had the flip. It reaches its 50%. Plus, the responsible one starts to consolidate its IPA, in fact, internally here, several times, until it closes below this. So, if we don't have confidence to enter here, with this close, right here, it's fine to enter. Well, from that point, it comes again and wipes this, and now we have here internally a structural change in a minute. Here we have a valid pullback. We close with a body above and we close with a body below. So look here, how it had reached 30% of this and the continuation occurred. So this remains an ITA. There is an imbalance inside and the price comes from here. It goes up here. Although well, over here a low-high candlestick pattern closes. A new low takes out the high, pull back, flip area, and it went. And from that, it went to do the sweep and started to reject here a lot until it arrives and almost hits the 50. I don't think it hit it because of a tick again and makes that low. So when this low pullback happens, like the responsible fractal in the lower time frame, it starts to move again, but the price is all the time moving from origin to origin, from origin to origin. And notably, we are seeing how it keeps decaying more and more around here. The price keeps decaying more and more, but this is still a no man's land for predicting direction, because below we are rejecting, and constantly rejecting. But if we look at it in terms of function fulfillment, the pattern is already complete with the tab, and the double bottom, which should give a continuation at the moment when the price is falling again, and then it makes that, and one says like, well, you'll see it's putting new logos despite the rejections, and when the price comes from those rejections, it's not taking the bullish hikes, it's not fulfilling its function, and you'll see if it's trying to make new logos. So here it's like that last move, that last attempt after these other rejections, and sweeps of this, and even look that it reached to sweep the origin with which we were working this flip. So it's a good sign. It also got to sweep this. The price tries to make a new high again. It doesn't succeed. And here this very nice flip happens. Pull back to the flip, which was the one I saw in the afternoon before going to the gym, and it happened there. Now yes, the movement downwards. At the 50% tick, and the price went down. Already seeing how it breaks this, with a body below all of these, and that all of this failed. It's an excellent sign to go down over here. The price comes to 50 and did nothing. It didn't do anything to 50% of this whole area we had, and to 50% of this, that would have been a responsibility. So look, he didn't do anything. He didn't make a candle pattern or anything, so that raises suspicions. He simply touched the flip that was left around here, and that caused a reaction, and it seems it was a false flip. So here, where I came in aggressive, left unmitigated, that's what hit. Again, 30% gave a good reaction. Now the flip has been left in a minute. It went back to that flip and gave something. But finally the overage ended up breaking everything until it got here to the flip that was left pending at the opening. Covers the 50%. A good reaction. And over there the market closed down. So, when we are against an order flow, if I didn't take the reaction, the first tap, I don't want to take a second tap, because that second tap is probably the continuation of the order flow that is happening. So I have to be very aware of when I'm trading pullbacks against something, or when I'm trading here in favor of an order flow on this side of the market. So if you get a flip here and all that, see how it ends up failing. In this case, the flip was already here. Remember that I don't need flip and flip and flip and flip. You know, if the flip is already here, I take the reaction and that's it. If there is no flip, but I'm in a swing area, I wait for the flip and that's it. So one area, one flip, and one entry. In this case, this origin here was also unmitigated. This flip, this candlestick pattern gave the reaction. I don't see the truth. In fact, a flip here. I mean, this movement was super linear. So no, the price reached balance and continued. So anyway, quite a nice market today. In seconds. Obviously, if you go and look at each thing in more detail, you're going to find entries everywhere. But that's what caught my attention the most today. Quite easy, straight from the book, so I hope this can be very useful for you. This is the last one I'll be doing these days because I'm going to make some videos about other things. The things I have pending, so I hope you can study a lot from the reviews I've already left for you.